Yo, another video. Hey, my name is Rice. This is the channel where we talk about Bitcoin and other things surrounding the cryptocurrency space. So really quick, just want to talk to you guys. So in my previous videos, I talked about where you could get Bitcoin, like the applications and platforms. So I wanted to discuss a little bit about like investment strategies for new people to the space of Bitcoin and other cryptocurrencies. So the method I would recommend and that a lot of people in the community use when they're starting out is called dollar cost averaging. And basically what that means is whether it be daily, weekly, monthly, you have a set amount that you're going to buy regardless of the state of the market. I guess I can give a scenario to kind of break that down. So let's say most people, when they hear about Bitcoin, is from like a coworker, or they saw a news headline or something like that telling them like, hey, I made this money off of it, or it's a great idea, you should really get into it, you should really buy it. And what new people do usually, they'll just go buy like a crazy amount of Bitcoin because they feel like they're missing out on an opportunity, or they missed the boat. And that's called FOMO, fear of missing out. So and that could be very, very bad for new people to Bitcoin. And the reason why is, if someone's suggesting that you buy it, or they made money off of it, or they saw a news clip or a headline, more than likely that means we're in the middle of a bull market or a bull run, or maybe even at the peak of the bull run, depending on the time of the market. And so if you go in and you throw a lump sum of money and invest in Bitcoin during a bull run or a bull market, usually what follows after a peak or an all-time high with Bitcoin is a correction or a dip. Some people even call it a crash. And what that means is, okay, the price just skyrocketed, it hit its peak, and now it's going to come down. If you just dumped a large amount of your hard-earned money into Bitcoin, and then you start to see the value go down, and depending on how high it peaked, sometimes it can come down or dip just as fast or faster than it peaked. That is going to turn you off completely from Bitcoin or frustrate you a lot if you're new to this, because most people are jumping into this, they're looking to make money, or the quick buck method, and that's not how this works at all. So just getting back to the dollar cost averaging method, so let's say over the course of a month, 30 days, you had been investing just $1 a day, just scenario's sake. You're getting both the highs and the lows of the market, the middle, whatever you want to call it. But it should balance out, as opposed to you just throwing that amount of money in and then you're hoping that the value goes up from that point to gain profit. Excuse me. But most people jump in during a bull market. Also, the reason I suggest dollar cost averaging is the emotional factor into it. And I've talked about that in my previous video about controlling your emotions, because Bitcoin can be super volatile. Like I just said, it can rise, it can fall at crazy speeds. So if you just dumped a lot of your money into it, you're going to be super emotionally attached to that investment. Whereas if you had just been investing a few dollars here and there every day or every week, you're not as emotionally attached to it, and you're less likely to panic sell, meaning you're seeing your value go down, and you think it's going to go down to the point where you're going to lose on your investment, so you just sell out and pull out as fast as you can. Man, there's so many stories that I've seen of people taking out like loans and mortgages and investing into Bitcoin, usually during a bull run because of FOMO, and then they start to see the correction or the dip, and they panic sell because they're scared they're going to lose out on their investment. And then like a week later, or even sometimes a few days, it starts to go back up again, and then they're trying to rush to buy back in, and that'll drive you crazy. So yeah, like I said, dollar cost averaging takes away the emotional aspect of your attachment to your investment, and also depends on your risk tolerance as well. So like me, like I said, I would suggest starting out with just $1. That's always my suggestion. Then you can get used to the ups and the downs of your investment. But if you're comfortable with investing $20, $50, $100, whatever you feel comfortable with, that's what you should invest. But the constant dollar plan or dollar cost averaging, if you're new to this space of Bitcoin and crypto, I would suggest starting out with that first, so you can get a feeling. Because even people who are skilled or experienced in the market, or in Bitcoin and crypto, I think the statistic is like 70% of people who try to time the market either lose their money or end up losing money. So yeah, trying to time the market, you're probably going to end up losing a lot of money. Just dollar cost average starting out, so you can get a feel for the market, and then you can kind of get a feel of the bull and the bear runs. But yeah, I'm gonna keep making these videos for you guys. Keep stacking those sats, dollar cost averaging, and I'll hit you guys up later.